Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, January 30th, 2020, and we again find ourselves in the final hour of the trading day. As I like to mention each day, I am primarily an end-of-day trader. That means that I make most of my buying and selling decisions right at the end of the day, right before the market closes. During the day, you have the algorithms, you have the day traders moving the prices around. I consider it a lot of noise. At the end of the day, the large financial institutions come in with size, with knowledge, with technology, and they move the prices. They take the prices, the movement of the prices away from the day traders and the algorithm, and they move the prices to what they feel like is the most valid price of the day. So that is why I like to ride on their coattails and make my buying and selling decisions based upon what the large financial institutions are doing. So hope everyone is doing well today. Thank you so much for coming by. Always nice to see you. Always look forward to seeing you. I hope you're getting something out of this podcast or this live stream each day that's helping you with your trading and investing. So interesting day today. We were down way further than we are now. Currently, the Dow is down 43 points, about only 0.14%. The NASDAQ is down 19 points, down 0.21%, and the S&P is down 6 points, down 0.18%. So we have had quite a rally off of the low, which is good. All right, so let's take a look here. Hey, Evan is here. Good to see you, Evan. Appreciate you coming as always, Gamer Squad. Hey, what's up, David? Hope you're doing well, sir. Gamer says, hi, Greg and all. Hello, Gamer. Marco is here. Hi, Marco. Hope you're having a good evening in Europe, in Slovenia. Thank you for coming. Nice to see you as always. If there's anything I can help you with, please let me know. Zach is here. Zach1662. Hello. Hello back to Zach. Hope you are all doing well. So, all right. Well, interesting. So here's the plan for today. First of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward. After that, we're going to spend a few minutes on trader psychology. In my opinion, trader psychology and discipline and how you handle your trade is the most important skill that you can develop in trading. It's important to learn the technicals. It's important to learn support, resistance, indicators, entries, exits. That is all very important. But at the end of the day, what's really important is if you can implement what you've learned and stick with it. If you find yourself not being able to do it, then that is a skill you have to work on. Maybe spend a little less time on chart study, a little more time looking inwardly as far as what can you do to follow your plan. And in my opinion, probably the best way to do that is just reduce your position size. That way your emotions are not amplified as much. So that is my suggestion. So we're going to do a few minutes on that. After that, we're going to go through my watch list. We're going to go through each stock one by one. We're going to take a look at support, resistance levels, indicators like MACD, RSI, moving averages, ATR channels. And my philosophy on trading is you will put yourself in a much better position to make a profit on a stock. You're going to increase your chances dramatically if you have a confluence of signals. I look at each signal or each indicator as one group of buyers. And so if I have 2 or 3 indicators coming together, or in other words, 2 or 3 different groups of buyers coming together, it increases my chances dramatically to have a profitable trade. So I'm going to look for a confluence or a combination of indicators lining up. After that, the second requirement, make sure you have a good risk to reward ratio. You definitely want to have at least 2 times the reward to the risk. So if you're going to be risking $100, you want to be able to make sure that you can at least make $200 based upon some kind of valid resistance level above you compared to a valid support level below you. And then thirdly, need to make sure I do not have too many correlated positions. It's very important not to be over invested in any one sector of the market. And ideally, it's nice to have some stocks. It's nice to have some gold exposure, some oil exposure, some silver exposure, some bond exposure, so you don't have all your eggs in one basket. So that is what I'm going to look for. And if I find something at the end of the day, I'll go ahead, place the trade right before the market closes. And then after the market closes, if you have any questions for me, please let me know. Feel free to just put your questions in the chat. If there's anything I discussed that you weren't clear on, let me know. I'll help clarify it. If you have any stock symbols that you'd like me to look at, please let me know. I'm happy to take a look at those, give you my humble opinion. And if you have any stock symbols that you think that you're looking at right now that you think would be helpful for the group and you'd like my opinion before the market closes, just let me know. Try to put a star by it or something so I know it's time sensitive. Okay, so that is the plan, everybody. So I'm going to go ahead and run the US legal disclaimer, and I'll be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All righty. Hey, Glenn is here. Hi, Glenn. Glenn says, hi, Greg. Still holding PayPal and gold. We'll be adding to bonds if we are weak into the close. All right. Yeah, your gold's doing well today. PayPal, I think PayPal reversed pretty strongly, right? If I remember correctly. Hey, it's even. Yeah, it was way down there. It was, my gosh, it was down 3.5%. So glad that rallied for you. Hi, Mount Doji. Good to see you, sir. Mount Doji says, what a day. Yes, it is. My gosh, what a week. And this has been nuts, right? I mean, first we have the Iran situation, and now the coronavirus situation. So since the beginning of the year, things have definitely got a little bit more volatile. Hey, Bob, how you doing? Nice to see you, sir. Appreciate you coming. Mount Doji said, would love to hear what you have to say about SIRI. SIRI. Let's see here. The low is sorry, 702, and the low today was 702. Yeah, so let's take a look here. Lower high. Need to wash out that lower low. We made another lower high a couple days ago, then washed out today in a V2. Yeah, it looks pretty good. Looks pretty good. It's right about in the maximum range where I would buy it, about 3/4. Does look pretty good. Let's look at the weekly. It's okay. You don't, when you look at something that you're looking to buy on the daily, you want to make sure that you look at the weekly, and if it's up near the third ATR channel on the weekly, even if it's great on the daily, I'm not going to buy it. But this looks okay. This looks, pretty moderate on the weekly, and nice V2 over the 2 days ago was low. So here's day 1, day 2, day 3, day 2 washes out, and then today closes above. But actually, this looks like a V2, right? But technically, you can only have a V1 or a V2. This is a V1 today. Yesterday's low. Today we washed it out. Reversed up, not too shabby. Hey Steve, how's it going, buddy? Nice to have you here as always. Always an honor, always a privilege. I'm always excited to have you here, see you here, and I know everyone else is. Oh, you got out of SQ yesterday. Okay, I wasn't sure if you did or not, so very nice, my friend. 10% move on SQ for Steve. Let's take a look at this. Okay, it's not down that bad today. Bought this dip close down to the 200-day and a V1, I might add, right? Threw the V1 in there for good measure. And look at this beautiful trade. So 10% position size on a 10% move. That's 1% that Steve made on this trade on his total capital. Pretty good for 1, 2, 3, 4, 5 days, right? Excuse me, boy, I have a frog in my throat today. So excellent, Steve. Proud of you, buddy. You've had some, 9.96%. Okay, we can call it 10. You've had some wonderful trades lately. What a great month. Frank says, hello, Greg and group. A poem. Okay, here we go. Pity the small gain. You'd think it was time spent in vain. So to refrain, a small gain is mundane, but it pays for a seat on the train or dinner at a fast food chain. That's good. Let me read it again. Pity the small gain. You'd think it was time spent in vain. So to refrain, a small game is mundane, but it pays for a seat on the train or dinner at a fast food chain. Ah, so good. And not only is Frank a great poem writer, but I mean, this is all very deep at the same time. I mean, yes, small gains add up. They add up hugely. They add up at the end of the year. They could, it doesn't seem like a lot in the short term, but they do add up hugely. They really, really do. Thank you so much for Frank. Thank you so much for that poem, Frank, and every day. And if it's okay, Frank, I'll post that on Twitter. People really like those poems. So Steve says I'm tweeting that as well. Yes, sir. Okay. Well, this has been some crazy trading since the beginning of the year. I mean, crazy trading. So let's get to it, see what we have here. First on deck is Merck. I did buy Merck back here on the 27th of January. A few signals that got me into this trade. Under 30 RSI, over 30 RSI, under the 100-day, over the 100-day. And a nice V1. Here's day 1, here's day 2. Day 2 washes out day 1, closes above. Next couple days moved up nicely, hit I believe 3 profit targets on this yesterday, which is great because now it's come back down. The reason I like to phase out of my positions in small increments, right? It doesn't have to be huge percentages, but like yesterday I hit 3 profit targets, and I guess it was about 20% of my total amount of shares that I sold out yesterday, right? At profitable levels, at higher levels. So if it comes back down, it's unfortunate, but at least I locked a percentage of the trades up here when it was higher and profitable. So that makes any decline, any subsequent decline, mitigates the loss because I took some off up here. So yesterday it did move more than 1 ATR away from my entry. At that point, I'm going to put in some type of trailing stop so I don't give it all back. My trailing stop here today would be a close below yesterday's low. We were under it earlier, but now we are above it. So if it closes below 86.43, I will go ahead and just lock in the gains. I will have a gain on the remaining shares because I bought it here at 86.10, but again, the scaling out, I got some gains at much higher prices. So I'll just have to watch this one carefully. Okay, world famous SPY trade. Man, SPY trade has been a tough putt lately, right? But like I say every day, you're going to go through cycles on this overnight SPY trade. Sometimes it's going to be the easiest money you make. Sometimes it's going to be the easiest money you're going to lose. But I do buy the SPY every single day at the close, and I sell it first thing the next morning. And this is regardless of technicals, indicators, anything. This is based upon a long-term back-tested study from Liz Ann Saunders at Bespoke Invest on Twitter. They did a back-tested study from 1993 with 2 variables. The first approach was they tested the SPY buying at the open each morning and selling it at the close each day. So buy the open, sell the close, buy the open, sell the close. If you would have used this approach every day since 1993, you've actually returned a negative 13.9% return for all your trouble and work. However, if you if you applied the second approach, which is what I do each day, and buy the SPY at the close instead of the open, buy it at the close, sell it first thing the next morning. So buy the close, sell the next morning, buy the close, sell the next morning. You'd have returned a spectacular 634.2% return compared to the opposite with a negative 13.9% return. So this is what I do every day. I buy the SPY at the close, sell it first thing the next morning. Past performance is no guarantee of future results. That is definitely true for any trading approach, but if I'm going to allocate money towards a trading approach, I'm definitely would rather allocate it towards something that has good track record compared to a bad track record. Here's the chart. You can see the blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. I love this chart because it shows you if you have an edge, and to date, using this approach definitely has an edge. You can see what can happen to your equity curve if you're able to use this every day. Well, since 1993 up to present, you know, you can see if you have an edge, how it can play out. There's ups and downs. It doesn't go straight up. Right now, I'm in a little bit of a drawdown myself, but you can see they're to be expected. It doesn't mean there's anything wrong with the approach, but it just means that even if you have an edge, you're going to have, you know, cycles, ups and down cycles with in this particular chart, ups and downs, but long term definitely has an upward drift. So that being said, I did buy the SPY yesterday at the close at 326.62 and got hammered on the open at 324.47 for about a, this is just roughly about a 0.65% loss. So it's been very choppy since the beginning of the year. Like I said, you know, we had the Iranian situation, now we have the coronavirus, so it's been really choppy. There's a lot of headline risk right now going on with the coronavirus. But back here, you know, look at this big loss I took overnight. Probably the biggest one biggest overnight SPY trade I've ever had since I've been using this. But it's been very profitable since I use it. This just in a drawdown at the time. And then we had 2 nice days in a row, profit. And then today, boom, right back down with the loss. So just like with any trading approach, you're going to have ups and downs. You're never going to have a perfect system. You just have to get used to these losses. But, you know, the one thing I can recommend is trade with the position size so that if you do get hammered, you know, it's not going to sting too badly. And I use a 10% position size max on all my trades. So if I had $100,000, the maximum amount of dollars that I would buy for SPY would be 10,000. So overnight SPY trade on this was a loss. Going to be buying this again at the end of the day. So that's it. Merck, if it closes below yesterday's low, 86.43, I will be getting out. If it closes, and then SPY, I'll be buying this again today at the end of the market. Okay. Now, let's take a look at a couple positions that you have been kind enough to share with me. Joe Turner did buy GILD back here on the 21st. Had a bounce near the negative third ATR channel. 90% of prices tend to find support at the negative third ATR channel. They tend to find resistance up here at the third ATR channel. So this is kind of the area. Things down here I want to look to buy. If I own them, gets up here, I want to look to sell. So this has been a really nice trade for him. I'm not sure if he got out of this yesterday or not because I didn't see him. But anyway, he will have to let us know. All right, GLD. Glenn bought GLD, which is gold, back here at 147.02 back on the 24th. Next day had a great gap up, down, up, much higher today, now a little bit lower, but congratulations, Glenn. Nice trade there. Andrea bought this down at like 115, I believe. It's so far down there, I can't really show it on the chart, but what a great trade. Up a little bit today. A little bit of a reversal here, though, we can see, right? Jesse has had a monster trade back here on 124, back into the value zone, V1, rejection of the 20, rejection of the 100. And look at this beautiful trade he's had so far today. Down a little bit today, but this is close to a, let's see, currently it's close to up 14.91%. So glad to see Jesse have a great trade on that. And then May did buy PAAS back on the 21st. This nice bullish engulfing bar, and this V1 moved up nicely, then down, up yesterday, up a little bit today. So that's about all we have. So we've had some good trades in there for sure. I'm glad to see everyone cutting their losses quickly on the ones that don't work out, and being patient and holding them for the ones that do. All right. Hey, there's Joe Turner. Joe, are you still in GILD? Went over that. I don't know if you got out yesterday. If you're still holding, let me know. Otherwise, I'll take this off the board. Hey, Evan. Oh, Evan says win. Ooh, man. Yeah. That has definitely had some issues because of the... Oh, I quite like that. I quite like that, Evan. Let me put this down. Let's take a look-see here. Let me run the numbers on this. Okay. Okay, yeah, I like this a lot. We're past earnings. We went from the third ATR channel below the negative third. I mean, this was a monster. I mean, we went from way above 70 to under 30. Today, let's take a look here. Today it was under 30, and now it is over 30. I like the sideways movement here. I like the V1. I like the rejection of the -1 ATR channel, or the 200-day moving average. I like the under 30, over 30, and I like this sideways movement. That's excellent. That's excellent. I really like that. I'll definitely consider buying that today. Yeah, that's great, especially like this sideways movement. You know, I always talk about sideways movement, spike down, reversal. This is a perfect formation for a V1, but in addition, under the 200, over the 200. This looks really good. Really good. So I'm definitely going to watch that. Joe Turner says, sold 1/2 GLD. Yes, Evan, it is a good risk to reward ratio. It definitely is a good risk to reward ratio, for sure. Woo. Yeah, that looks really great. Let's look at the weekly. Look at the weekly. See how we bounced off the 200 as well? Definitely like that as well. Let me clean something up here. Okay. Sorry, I'm trading some options for a friend of mine. Okay. There we go. Yeah, that looks pretty good. But, you know, this is a good example here, right? On the daily, really nice setup. I always like to look to the weekly, see if I can find something conforming on the weekly. Yeah, I mean, back here we had all the support. We have the 50-week moving average. We have the 200-week moving average. Bounced off of that. So I do like this. Very good risk to reward ratio. Most likely my stop here would be close under the 30, under the 100-day moving average. Possibly the 100. I'll just have to see. Let me see where the 30 would be. 30 tomorrow would be, yeah. So basically, if it goes down, it's probably going to take out the 200, the 30. But yes, I do like that. I definitely like that. Joe Turner has a poem. If you short the stock tomorrow, there must be shares for you to borrow. You'll sell it first and then keep track, because later on you must buy it back. Oh my gosh, we have poets in this chat room. This is so great. If you short the stock tomorrow, then there must be shares for you to borrow. You'll sell it first and then keep track, because later on you must buy it back. That's right. That is exactly right. And Zach, if that's confusing to you, because we talked about shorting the other day, if that's confusing to you, you know, when you short a stock, you don't own it, so you have to borrow the stock that you're shorting from someone. And then if you short a stock, in order to get out, you always have to buy it back. What a great poem, Joe. Frank says, good one, Joe. Glenn says, NASDAQ's gone positive. Yes, it has. Mandoji says, when is too virus dependent for you? Okay, sounds good. Yeah, I definitely think you're right. It definitely is virus dependent. Steve says, 1 to 2 risk to reward is good. 1 to 3 risk to reward is great. The higher the reward to risk, the less your win rate has to be for profitability. 100%. 100%. You know, if you have a legitimate 1 to 3 risk to reward ratio, then less of the time you have to win, because you're making more in the times that you do win. Okay. Let's take a look-see here. All right, everybody. So listen, this is the time of the day where I do like to talk about trader psychology. I think it is very important in your trading toolbox. Like I mentioned before, you can have the best plan in the world, but if you are not able to follow it, it doesn't really do you any good to have it if you can't follow it, right? So I do like to talk about trading psychology each day. There's some really good channels out there on Facebook, on Twitter, that post good words of wisdom, good words of trading wisdom every day, you know, and focusing on psychology. And one of the best ones out there is my friend Thomas Payne at Trader T Payne on Twitter. Really, if you haven't subscribed to Thomas, you really should. He really has some deep understanding of trading psychology, and I always find it helpful, so I think you will be too. But I read this and I thought, boy, you know, this is spot on. So listen, new traders enter the market and begin forming opinions about their observations, which lead to the formation of beliefs. But since they have a beginner's perspective, they are most likely making false assumptions. They stick to those false beliefs, and this is a major mistake. So why I think this is important, especially for new traders, is, you know, let's say the new traders came in, they started trading in December. Well, December was straight up, if everyone can remember, right? December was literally straight up. So if they're a new trader, they come in, they're going to kind of think that's what the market's about, right? Because it's a new experience, and they're forming opinions, and once they form those opinions, they kind of feel like that's what's going to happen in the future. But we all know that December was a bit of an anomaly. So new traders enter the market and begin forming opinions about their observations, which lead to the formation of beliefs. But since it is a beginner's perspective, they are most likely making false assumptions. So, you know, if you based all your trading off on what happened in December, well, it's not really reality. I mean, it happens, but not a majority of the time, very rarely. So, you know, you may make an assumption that the market always goes up. Then they stick to those false beliefs, and this is a major mistake. You know, they've done some studies that when you first start trading, if you make it, whichever direction you make your first big win, whether it's to the upside or the downside, the rest of your trading career, you're going to have a bias towards that. So if you come in the market, put on a short trade, and it just goes spiraling down and you make a lot of money, you are more likely than not going forward in the future to be biased and want to take short trades, right? And you know, taking short trades generally is not a good idea. Statistically, the market goes up more than it goes down. But if you come in and you make an assumption and form a belief about, hey, you know, that's really the place to make the money, then you'll probably be battling with that your whole life and trying to short based upon that false belief that short trading is the way to go, and that is a major mistake. So, you know, if you're a beginner, be flexible about your opinions. Just because something happened one time doesn't mean it's always going to happen again and again and again. So, you know, be flexible in your observations. Keep open-minded. A lot of different things can happen in the market. So, all right. Well, thanks, Thomas. I thought that was a little bit out of the norm, but very deep and so spot on. So thank you, Thomas. And I hope that was helpful to everyone. Okay. All right, well, let's see how we're doing on our current positions here. So Merck, definitely staying above previous day's low, so this is good. And then SPY is almost going positive. My goodness, on such a day, All right. Let me check on something here. Okay. Well, let's start off with Apple. So Apple had earnings, gapped up, false breakout to the downside. False breakout to the upside yesterday. See the previous high? We rallied above it. Now we're back in the range. So this technically was a false breakout to the upside. Back in the base, we have a double top with a bearish divergence. You can see how high the MACD was here on these previous highs. We went red on that big sell-off. We rallied higher, but even though we rallied higher, we do not have any green bar. So this is what is called a double top with the bearish divergence. It doesn't mean I'm just going to go ahead and short this, but from a technical standpoint, this is a bit bearish. And again, we have the high over here. We have the MACD showing strength. We have a pullback, which we need. We've gone red, but now yesterday we went higher. Even though we went higher, we did not have any green bars. So this is what's called the double top with the bearish divergence. Like I said, doesn't mean I'm just going to go ahead and short this. Because I'm not, but this is what Dr. Alexander, this setup here is Dr. Alexander Elder's favorite technical setup, and he believes it's the most powerful setup. So we shall see whether this goes down or not. Adobe, just kind of hanging out here. It's made this range. Anything over the 1 ATR channel, I considered overvalue. I'm looking for a pullback into value to get interested in Adobe. Amazon. So there was a signal 2 days ago on Amazon. We went under the 200, over the 200. I decided not to take it because we have earnings coming out today. Nothing wrong with taking a position into earnings, but I decided not to take it mainly because we have this big down bar in our recent past. And when you have a big down bar like this, a lot of times you are going to run into resistance about halfway. And you can see it's exactly what happened yesterday. Nice that it's up today. We do have earnings after the bell, so that should definitely be interesting. So if I were in this position, I would have to get out today before the end of the close because of earnings, and I don't like to gamble on earnings. Boeing. Well, Boeing's been pretty strong in the face of a down market these last few days, so good relative strength. We do have a bit of a V1 here. Here is day one. Here is day two. Day two washes out day one and might close above day one's close, and MACD is positive. So that's pretty good. Me personally, I would like to have seen 2 days down before the V1 or V2. You can see, yes, it was down yesterday. Not down from open to close, but underneath its open. So if any of you have Boeing, hope this goes up for you. It's definitely holding pretty strong here from a relative strength perspective. Berkshire Hathaway, whew, look at this. Same thing. We went below the -1 ATR channel. We did rally into the value zone, which is what I need. Here we have a beautiful V1 rejection of the 50-day moving average, but we only poked our head in the value zone and 1 day down. I prefer to have 2 days down before I take a V1 or a V2. Beyond Meat, Steve had a beautiful trade back here with the 5 crossing over the 20. He had a 38% move in 5 days. Unbelievable trade. He got out here on this reversal bar. Pretty much since then, it's just kind of been choppy and moved sideways. For me to get interested in Beyond Meat, I need to pull back into the value zone to get interested. Caterpillar. So 29.77. This may go under 30, over 30, but we do have earnings tomorrow, so I'm not going to get involved with Caterpillar, but I would be interested to see what happens with Caterpillar after earnings and see if there's a trade after that. Possibly an under the 200 back over the 200 would offer a good risk to reward ratio. Okay, Dow. Okay, yes, we do have a higher low V1, but it came only after 1 day down, which I don't like. So I'm going to pass on that. Walt Disney. So a few things going on here. You know, Walt Disney did form a V1 here today. Here's day 1, here's day 2. Washed out day 1, looks like it's going to close above day 1's close. Looks like it's going to close above the third ATR channel. We went under the negative third ATR channel and above. We also tested this previous low here and reversed. So I did take Disney 2 days ago, and then next day, boom, it closed below the 200-day moving average. So I did have to get out for a loss. I'm definitely considering re-entering this again because of the, oh, and it went under 30 again today. It went under 30, over 30. Nice V1 entry here under the negative third, over the third. You know, if it moved up tomorrow, rejected the 200-day, I would probably just go ahead and get out. If it continues up, holds above the 200, then that 200 would be my initial stop. So this is definitely on the table for me today, Walt Disney. Etsy, nothing here on Etsy. I'd need to pull back into value. Facebook, missed on earnings for whatever reason, that the market decided they didn't like it and got hammered overnight. It was down much lower earlier today. Murrett was right. Murrett was right. He thought that it would gap down and reverse. So Murrett was right on that. Would I buy this here? Probably not. I mean, it did reject the negative third ATR channel. It did go under the 50, over the 50. I mean, you know, you could, if you wanted to. This big drop concerns me, but you know, if I were to take this here today, which I'm not, I would definitely use a close below 50, so it would give me a good risk to reward ratio. But I don't generally like to buy these huge skyscraper down bars, because this bar looks like it's this big. It's actually this big from here to here, so it's a massive down bar. Gold. Still positive here on the day. I'm waiting for the 5 EMA to cross back under the 20 EMA and then cross back over, and or just a pull back into the value zone, sideways movement, V1 or V2. This was a recent trade that I took back here using the same approach. Here's the 5 EMA crossing over the 20 EMA, and you can see that was a really great trade. So that is what I'm looking for. Again, I'm looking for the 5 EMA to cross under the 20 and back over, or a pullback into the value, sideways movement, and a V1, V2. Google. So we were above the 1 ATR, above the third ATR channel, right? Wanted it to come back into value. It did come back into value. Just to go show you, it's very hard to buy up here. Everything looks good, it's exciting, but it's better to wait for a pullback into value, because I'm telling you, they always come back here eventually. So nothing here for me. We did make a lower high, so for me to get interested in Google, I would have to wash out this previous low first. Goldman Sachs, V1 today, but it comes up against yesterday's bar, which is larger than 1 ATR channel, so I cannot get involved with that. Home Depot, looking for a pullback into value. IBB, 35.85, so I would be interested in buying IBB I would at least need an under 30, over 30. So we're still not quite there yet. Looking for a deep dip buy there. Intel had earnings, gapped up. Still too elevated. Need to pull back into value for me to get interested. IWM, which is the Russell 2000, still below the 50-day moving average, having some issues there. I'd like to see IWM move into the value zone, pull back a couple days, have a higher low V1, and then take the trade. Johnson & Johnson, nothing really going on here with Johnson & Johnson. I would need to pull back into value here if I wanted to go long in the future. CarMax, up today, very, very, very strong. I would be looking for a pullback into the value zone before I could get interested. All right, Coca-Cola. Well, it looks like Coca-Cola had some good earnings, up almost 3% today. Too high for me to buy. Have to wait for a proper pullback. Lockheed Martin, nothing there. Very strong, but need a pullback into the value zone. MasterCard was way above the value zone, came down to it for one day, and then it got bought back up. So I would still need it to come back here in the value zone. How are we doing on time? Okay, we're doing pretty good. McDonald's, very strong. Same thing, need to pull back into the value zone. Sideways movement, V1, V2. Okay, here's our Merck. So definitely well off of its lows. If it closes above yesterday's low, I'll just have to go out and take a loss. If this closes above, I will keep it. Microsoft had great earnings, gapped way up, came way down, now back up. But you know what I'm going to say? It's just too high for me to buy up here. I need a pullback to get involved. Netflix up a little bit today. It was above the 1 ATR channel, came into the value zone. Now I need it to move sideways for a couple days, which it has, and then look for a V1 or a V2. Nike, pretty weak today. Lost the 50-day moving average. We're getting close to the deep dip buy area. It's 34.90, so I would be looking for a under 30, over 30 on Nike. But again, better than buying up here, right? Whew, look at Philip Morris. Boy, it came down, just raced right through the value zone. Down, 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 down. V1 today. Let's take a look at the weekly. We have the 100-week moving average here. That should have held as some support. I think I'll probably just pass on Philip Morris. I mean, we do have a V1. We do have a rejection of the negative third ATR channel. I'm a little concerned about that 50-day right up there, so I'm going to let that one go. PayPal, look at that. Right back into the value zone, right? Pretty much tested that previous low, then reversal back up. Qs, the big down day, the rally to about halfway of the move between here and here, which is right about here. V1 for sure today, right? Higher low V1. Here's day 1, here's day 2. But for me on the Qs, two things wrong with this. One, I didn't have 2 days down, and two, it looks like it might be triggering over the 1 ATR channel, so I can't really do anything with that. Silver, well, I thought silver might be a possibility today. The 5 was under the 20. I was looking for it to cross over, but now the 5 EMA is 1660 and the 20 EMA is 1663. So at the end of the day, if these two match, 1663, 1663, or they match, or the 5 is higher, I would go ahead and take that. But we'll just have to watch that one. S&P, of course, had that losing trade overnight. I will be buying this again at the end of the day here for the overnight SPY trade. Andrea has her TLT. Great trade. Looks like it's a little toppy up here. I think we were over the 70 RSI earlier, and now we're below. So, you know, if ever I'm holding a long position and it hits the 70 and rejects it, that would be my area to take profit. But I'm not sure what Andrea's going to do with that. So Andrea, let me know. Tesla is just beating the crap out of everybody who's short. I mean, look at this, up 10, 11% today on earnings. We are up here at the 6th ATR channel, which is quite extreme. But anyway, I cannot get involved in Tesla. That scares me either to the upside or to the downside. Twitter, really nothing on Twitter. UAL, look at this. So we've had quite a big bounce on UAL here. Under 30, over 30, a bit of a V1. I'm not going to take this one. I don't like that the third ATR channel is right above us. What I'd really like to do is I'd like to see this move up, then come down, and then have a nice higher low V1 or V2. But so it looks like the markets are pricing in some good news possibly for the coronavirus. That is why UAL is up. I mean, it has got so hammered lately. Look at this. UNH, nothing really there. Oil, much lower earlier. We're hanging out about the 6 ATR, negative 6 ATR channel. That's generally about it, but there's no signal there. The VIX was up much higher earlier and now has reversed. I had a great trade here on VIX. We went under 30, over 30, under the negative third channel, over the third channel, plus a V1, and had a great trade here. It was close to 15%. Ran out of shares right at the top, which was right about the right place to run out. So I have not been in VIX since then. Verizon, boy, we had that big day up, big day down. Looks like they missed on earnings or so forth. But I do want to show you how we doing on time. Look at this beautiful double bottom with the bullish divergence. See this low? See the deep MACD bars? See how we rallied into the green? Now we've come lower and reversed back up higher. So it's a false breakout to the downside with a really bullish divergence here. Deep bars here, shallow bars here. You know, would this be legitimate to take? It would, but what I'm really going to be looking for is for it to move up even a little bit one more day, and then for people to take a little profits, have it come back down, and then try to buy the V1 or a V2. But really nice reversal here on Verizon. Walmart, pretty good here under the -1 ATR channel. We've had a higher low V1 for sure. We have had a higher low V1, but again, I was looking for 2 days down, not just 1 day down. MACD is positive, so that's all good. Energy had a nice V1 here, but we're still not over the 30 RSI channel. I'm sorry, 30 RSI reading. XLF, look at this. Another V1, but again, just 1 day down, bullish engulfing. You know, we're to 50 RSI, but I can't take this because I didn't have 2 days down. Real estate, nice move. Now we're pulling back. Just like to see it pull back further into the value zone, sideways movement. And then look for a V1, V2. Utilities, very, very strong again today. I would just be looking for a pullback into value down into this area before I could get back involved. I did buy it back here on the 9th. We were above the 1 ATR channel. We came into the value zone. We moved sideways. I got this trigger here and had a great trade, and I washed out of the trade right about up here. So that was a great trade. And healthcare. Healthcare is still pretty weak today down here. All right, well, that to me, what looks the best to me right now is possibly Disney. And we'll see if it closes above the 200 day. If it does, I will definitely take it. When I really do like. I really like that sideways movement, the V1, and I really like the sideways movement, the under 30, over 30. Looks like a bullish engulfing bar now, rejection of the 10, rejection of the 200. So yeah, this all looks pretty good to me. Silver, the moment, does not look like it's going to trigger. Let's see, 137.61, 137.56. So I'll have to be watching Walt Disney here. If it closes above the 200, I will take it because it got to the 200. Let's see, The high is 137.63. Yeah, so it already has tested the 200 already. So if it can close above, I'll take it. If it closes below, I will not take it. And then I really do like Win. I really do like Win, and I like on the weekly, see how we're right here on the 200 week as well. So Disney and Win are what I'm looking for at the moment. Evan says, didn't you used to have AMD on your watch list? Yeah, I did. Sometimes I switch them around. I think it was too high at the moment, and I didn't want to waste time with it when it was up that high. What are we doing now? It's up 2.23% today. That's pretty good, but I don't see a signal. Josh says, hey, Greg and all. Hope it has been a good day. Greg, any thoughts on Roku? Higher low V1 back in the value zone, but we only had 1 day down before the V1 or V2. On these higher lows, when you're down below the -1 HER channel and rally back in, I want to see 2 days down before I take the trade, and this is only one. But, you know, if you decide to take this, I would use a halfway of this washout bar as my stop, but not too bad. DLRT. DLRT. My goodness, really? I mean, that is a beautiful V1 for sure. I mean, look at this sideways movement. I mean, this is what you're looking for, sideways movement. I don't know if that was a real tick or not, but that's a beautiful washout. It looks really good. I'm not familiar with the company, so I wouldn't buy it, but that does look pretty good. I mean, you know, talking about a sideways movement, rejection to the downside, and reversal, boy, do you have it there. But the problem is, look how big this bar is. I mean, if you're going to use a halfway of the washout bar, your risk is down there. I don't really know if that offers you a good risk to reward ratio all in all. You know, if you use a halfway of the washout bar as your stop, then can you go twice that to the upside? You know, hasn't liked it up here at all. Me personally, I would probably pass on that trade. Hey Andrea, how you doing? TGT. Higher low V1. In this case, we did have 2 days down. This is what I was looking for, 2 days down. Bump, bump. But it did not happen in the value zone. So me personally, let's see, did it go under 30? Bounced right about 30. You know, it's okay. It's better than just a random trade because of this V1 and the rejection of the third ATR channel. I mean, it's okay. It did hold the halfway of this up bar here, which is also good. Me personally, I don't think I would take it, but I can see some positives about that. Glenn says, I use stock charts to draw charts. How do I set up the value settings similar to the ones you use? Okay, I'll get back to that one because I only have 6 minutes. F wonk. Yeah, I do like that one. Who asked that? Being he. Yeah, I do like that one because that gives a good risk to reward ratio. Bullish engulfing, V1, just about the maximum that I could take this. But if you're wrong here basically with the close under the 20, and then, you know, you have the possibility to go up here. Yeah, I do like that one. Disney's earnings February 4th. That's true. JT, thank you. Bob says, I can't find the Win earnings. Should have been yesterday, correct? Yes, right here, Bob. was right there. Andrea, thanks. I think you put in the wrong symbol for Bing He. He wanted DLTR. Oh. That sounds like something I definitely might have done. Thank you, Andrea. Appreciate that. Well, it's a V1. Did it reject the 30 RSI today? Let's take a look-see. Yeah, it did. Not bad. Under 30, over 30. V1, rejection of the third ATR channel, rejection of this previous low. Yeah, it looks pretty good, Bing He. 87.70, 87.72 for Bing He. Okay. $87.72. All right, so we got Bing He on the board. All right. So Disney 137.61, it is above. If it closes above 137.61, I will buy it. $137.61. 137.61. Okay, so that looks good. I do like Win. I really do like Win at this point. So I'm going to be buying the S&P overnight SPY trade. I'm going to be buying Disney as long as we close above 137.61, and I will be buying Win and the overnight SPY trade. So definitely we'll be taking some positions today. All right, let me clean this up. Okay. Okay. Wow, this is quite the rally. Okay, so 300. How are we doing? 2 minutes. Okay. All right, so Disney looks good. Win looks good. Our S&P trade. Be interesting to see what Amazon does in earnings, with earnings. Okay, so we have about 30 seconds. Disney, is it still good? Yes. Win looks strong. Merck, oh. 43, I may have to get rid of Merck. No, it held. Okay. Well, we have some new positions. So Disney, 137.77. Okay, and then win. Let's see, and then $137.77. Right there. My close will be a stop below the 200-day, right? Just as close as I can get it. So this does give me a really nice risk to reward. All right, 137.77, and then win. All right, what did I get win? 126.60. 126.60. And Merck held in there. So Disney, Merck, Disney, work, SPY, and win. And then where did we get filled on SPY? 327.68. Okay. $327.68. And that's the new SPY trade. So be interesting to see if this can carry over in tomorrow. I hope so. This has been a challenging trading month, definitely. Oh, hey, anybody have any opinions about Apple's earnings? Not Apple, Amazon's earning, up or down? Even if it's up, does the stock go down? So are the earnings up or are they down? And what's the reaction? What's the reaction after earnings? All right, so I'm going to go through the rest of those comments there. Before I do, I just quickly want to put in my quick little daily plug, let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I do have a course. It's 5 sessions. Each session is somewhere between 2 and 3 hours. It's just you and I. It's very interactive. I teach you everything I've learned over the last 24 years as a full-time trader. I teach you everything I've learned from all my mentors and coaches like Steve Burns and Dr. Alexander Elder and Kerry Lavorne and Larry Williams, all the things that I've developed over the years. But the course is $1,000, but I think it is definitely worth every penny of it. Like I said, it's very interactive. I teach during the first part of the lessons. I have you teach it back to me. The second part, we do a lot of chart study. I have you break down the charts. And so anyway, if you're interested in taking this course with me, the one-on-one course in the evening time via Skype, just reach out to me. You can send me a message. My email is in the description of this video. You can also send me a message on Twitter. And what I like to do with prospective students is I like to have just a free Skype call just to get to know each other a little bit better. I want to know more about you and your trading and your challenges and your goals. You can ask me any questions that you want to ask me. And then, you know, if we feel like it's the right decision and both parties are interested, then we can move on and schedule up the lessons. But if you're interested in the free Skype call, please just send me an email and we'll set it up. So, and then secondly, if you like today's podcast, if you find this is valuable, if it's helping you in any way, I really would appreciate if you could hit the thumbs up button. It helps to build a channel. A lot of people out there need help with trading. They need to, you know, be able to form some kind of plan. And I think if we could get them to this channel occasionally, it definitely would help. So you can help me help them by hitting the thumbs up button and getting them here. So Evan says, I think Amazon misses and drops. Ooh, well, I think Evan was right on, Evan, you were right on Apple, right? I believe you were exactly right on Apple. That they would beat earnings and it would go up. Okay. So we'll watch out for Amazon. We'll see what happens. Amazon's up 184 points, everybody. It's up almost 10%. Oh, wow. Wow, wow. All right. Well, Amazon did not miss and did not drop. It's up almost 10%, everybody. Wow, wow, wow. What a move. What a move. So, you know, it just goes to show you that you just really never know what's going to happen with earnings, right? I mean, you just never know. So, you know, it really is a gamble. That's the thing. Ooh, SPY's up nicely after hours. Wynn's up, Disney's up. All right, well, that's good. That is good. Frank is in Amazon. Fantastic, buddy. Fantastic. But just goes to show you, you really never know what's going to happen with earnings. You just are going to gamble, you know. Let me go back here then. Glenn, hi Greg, I use stock charts to draw charts. How do I set up the value settings similar to the ones you use? You know, Glenn, in the description of this video, I have a video. It's a YouTube link under the lesson section in the description here. And there's one lesson particularly that I go through all my chart settings, all the values, every technical indicator that I use and what the values are. So if you just watch that, it will take you through specifically every single indicator that I use and their values. And then you can set up your chart exactly like mine if you like to. Okay. Oh, Andrea sold the TLT. I kind of like that, Andrea. We were above 70, under 70. It's a bearish reversal bar. You've had a really good run. We're getting next to getting close to the 6 ATR channel. So nice trade. Nice trade, Andrea. Beautiful. All right, so we're going to take Andrea off the board. What was Bing he had? Right, there we go. There's Bing He's. Dollar Tree, let's take a look. Okay. Evan says, great trade, Andrea. I agree. Evan, new positions, exciting. We'll see, huh? We shall see. Hey, William, good to see you, my friend. Hope you're doing well in Hawaii. Evan says, okay, Andrea, Kamal, Amazon 2000, unbelievable. Kamal says, I'm watching the market. I think Kamal's at a science fair right now. First grade science fair. Awesome, Kamal. Hope you have a good time. Really glad to hear Frank's in Amazon. Congratulations, my friend. Kamal says, the value zone is going too far away from Amazon now. Oh, yeah. I mean, $2,000. I mean, that's going to put it... I have to go to the monthly chart even to get, you know, we are way up here now. Marco said he just sold Amazon stock at 2060. Very nice. Oh, I'm glad the earnings worked out for you, Marco. Let's take a look. Okay, so it's at 2053 now, so you definitely got out higher. Very nice. Very nice. Okay. Well, that is definitely going to help the overnight SPY trade. So in a strange way, having the SPY, you know, you're involved in Amazon. So let's see. Marco still has some calls, 1925 calls. Wow. Well, you are in the money, my friend, for sure. Bing He, today a lot of setup in my scanning. Very stressed to filter through. I think I missed a few others. Decided to only take DLTR. Yep. Well, this nice bullish engulfing candle, the rejection of this previous low, the under 30, over 30 in the V1, and over the 5-day moving average, which has not happened since all the way back here. So, and the weekly we're still under the 100 or the 200 week moving average. So we might have to watch that up there in like $91 price. And by the way, Bing He, I did get your email and I read over it, and thank you so much for sharing all the updates with me and everything in the email. And I agree with you. You know, I think you've had some nice trades lately. I believe that you were very structured in the setups that you took, not luck, but some skill, or at least you had a plan that you followed. So I'm proud of you, Bing He. I really, really am. Joe said, it's been nice, it's been fun. I hate to say it, but I must run. All right, a little poem on the way out. Thank you, Joe. Appreciate that, my friend. And I am also going to post Joe's poem as well. I just love these poems. Who would have ever thought, right? Andrew says, nice, Marco. Absolutely. Proud of you, Marco. Bob says, headline today at 4:05. Win earnings on 2.26. Joe is right. Oh, why do I have it here on my chart here at 129? I guess they moved it. So wins earning are on the 6th then, after the market. Okay, interesting. Hey, Bill Richardson. Bill says, you know, the worst week I've had was a week back in the fall around earnings where I stayed in several positions. So one-time lesson learned, and I don't care which way they go because I'm out. I agree, Bill. I agree. Earnings are tough. You know, they're tough to. You're really gambling. They may be great earnings, but the stock may go down. I remember when Amazon had great earnings, but after earnings, immediately they were down 100 points. I mean, they beat earnings handily, but they were down 100 points. So, you know, even if they have great earnings, you don't know if it's going to go up or down. Sometimes they have bad earnings and you're surprised and it goes up, right? So all in all, I think the best policy is just not to gamble through earnings. Sometimes you're going to wish you had. Sometimes you're going to be really glad that you didn't. William says, hi, Greg. When you're waiting for a higher low V1 from below the 1 ATR, hi, Greg. When you're waiting for a higher low V1, V2 from below the 1 ATR and you never got 2 down days. Yes, that is correct. Which stock are you talking about, William? But there were a lot of them on the charts today that had that exact formation, and that's why I didn't take them. Now, there's some situations where I may get a higher low V1 or V2 that doesn't have 2 down days. I may only have 1 down day, but I'll still take it, but only if there's contributing indicators like an under 30 and over 30, or maybe an under the negative third, back over the negative third, something like that. But if it's a pure higher low V1 or V2 where you're below the negative 1 ATR channel, you rally into the value zone, then I need a couple days down, because usually selling happens in kind of a 2-day pattern where you go up, you'll go down on one day, then people will see it, people will read about it, and then a lot of times that second day it will follow through and then reverse back up. So that is why I prefer to have 2 days down. William says, but the stock continues to move up and creates another higher low opportunity. Will you still require two down days? But the stock continues to move up and creates another higher low opportunity. Will you still require 2 days? Yes, generally, yes, William. But, you know, if you miss a higher low V1, like if I'm waiting for 2 days down and it only has 1 day down and then it moves up and I miss it, then I will turn to looking for a crossover, a moving average crossover to trade to get me in that then. Does that make sense, William? Let's see what the mighty Amazon's doing at the moment. Up 244 points. Imagine if you would have stepped into that with the short, everybody. I hope nobody did. It's up 13%. Oh my goodness. Disney's up nicely. Glad for that. After hours, Merck is up a tiny bit. SPY is up 80 cents, so that's nice. And Win is down, but there's a huge spread there of $2, so I don't really take that too serious. Bill says, that being said, I do make my guesses as well. I have learned to evaluate stocks pretty well. So I will take a guess based upon my valuation and the trend going to earnings, but no actual position. Good. Good. Brian. Hey, Brian Schwartz, how you doing? Good to see you. Amazon over 2,100. Bill Richardson says, you can see where the price is being built up going into earnings so it can be sold off, but it is nothing I would use to risk my money with. Exactly. Frank said, I just sold my Amazon. Perfect, Frank. Perfect. Really glad. What'd you sell it at? So this is at 2,100. So, oh, we made an all-time new high. We made an all-time new high on Amazon. Wow, what a huge day. And you know, I always talk about this, whether you follow your rules or you break your rules, you're going to have some regret. Unfortunately, that's just trading. Like Steve Burns, right? Steve Burns had Amazon. I assume he sold it going into earnings. Pretty sure about that. And of course, you know, in hindsight, he wish he would have kept it, right? Because it's up 15%. But that's just how it goes. There's going to be other times if you break your rules and hold through earnings and it goes down, you're going to regret that. Other times you're going to sell before earnings because that is your rule, and then it's going to go skyrocketing up, so you're going to regret that. So there's regret all over the market, but don't let it get to you. Don't, you know, burn a lot of calories on it. Just follow your rules. Just know that sometimes it's going to work for you, sometimes it's going to work against you, and that's just trading. So it's up 237 now. All right. Oh, there we go. That's what I was looking for. Okay. $21.21. Very nice. It's $20.99 at the moment. So happy for you, Frank. What a great feeling, huh? Brian says, crazy how they manipulated Amazon for so long, almost like they artificially kept it lower. Yeah, you never know, right? You never know. Or they were just very good at keeping those earnings a secret. Bill says, I'm signing off. I'm here almost every day. Sometimes I'm only able to just listen and not engage, but always enjoy and appreciate the time you give. Enjoy the rest of your day. Thank you, Bill. Appreciate the kind words, my friend. It's always nice to have you here. All right. Wow. 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 You imagine being short today? So brutal on Amazon. I mean, the shorts have just been handed it lately with Tesla and now Amazon. Whew. Speaking of Tesla, well, listen, if you have any other questions, now would be the time. Otherwise, I'm going to put on my hiking boots, take Katie girl out for a walk up in the mountains. While I'm waiting to see if you have any other questions, just want to, two things, as always, each day at the end. Please go out, do something nice for somebody today. Just a kind gesture, just a smile or hello or a hold the door, or just something. You really may impact that person's life in a really positive way, just with the kindness, the small kindness, right? Just with one small gesture. And you never know, they may have like a horrible day, and you being kind to them may just bring them back down, you know, and make them realize that maybe not, life's not so bad. There is actually some humanity out there. And then two, you know, on your way out here, if you haven't hit the thumbs up button and you did enjoy the podcast and found it valuable, I would appreciate it if you could hit the thumbs up button on the way out. Frank says, I was also in the Apple earnings, but sold today. Very nice, Frank. Very nice. So what did Apple? So Apple was down a touch today. Interesting. Yeah, down a little bit. So just a quick recap here. Did buy Disney over the 200-day. A lot of signals here, under 30, over 30, V1, under the negative third HER channel, over the third HER channel, false breakout to the downside from this previous low. So we shall see if Walt Disney can move up from here. Merck did hold in there, kept above previous day's low, so that is positive. SPY did buy SPY here on the overnight SPY trade, so we shall see what happens with the overnight SPY trade. It's been pretty rocky lately, and then when. I do really, try to emblazon this in your mind. An under 30, over 30 is good, right? But you see how we gapped down and we held. This sideways movement is really what I like. And then the quick rejection underneath and move back over. And then, this is a perfect example on looking at multiple time frames. Does the daily look good? Yes, daily looks good. Looks great. But then go to your higher time frame. And, if you're trading weeklies, go to the monthly. If you're trading dailies, go to the weekly. Do you find some good support here on the higher time frame, the weekly? Yes. I mean, you have all this support over here. You bounced off the 200 week moving average, the 50 week moving average, and it's back in the value zone. 100%, We shall see, though. I mean, we get some bad news out with coronavirus again. Who knows? Kamal says, how will you evaluate Roku? I don't see much more than a V1 and testing of a bottom in the value chart. All right, let's take a look. Well, Roku has a higher low V1, Kamal. See how we closed below the negative 1 HER channel? We moved up into the channel. We've had 1 day down, and then we had this reversal bar here, the V1. Here's day 1, day 2. Day 2 washes out, closes above. So, I mean, the reason I wouldn't take it was because we only had the 1 down day. Doesn't mean it can't go up. But again, I always talk about things in taking the same trade for 100 times. If you took the same trade, this same trade for 100 times with just the 1 day down, I think you would be less than 50 times winning. But if you have a move up, you have a couple days down, and then you have a V1 or a V2, I think you'd be about somewhere between 60 and 70 times out of 100 winning. So it's that extra day. Although, one additional thing here, you see the green triangle. So this is a good time to talk about this. This is a V1 to the downside. See, we have the high. Yesterday, we went above the high and closed below. See the V1 to the downside? That's bearish. But today, we immediately reversed that bearish by going above day 1's high. This is from Larry Williams. So here's the high. We wash it out, come down below. That is bearish. But if you can take something bearish that immediately reverses back up and closes above the high of that day, that is good. So we did confirm the this fake out bar to the downside that reversed back up, and we had a higher low V1. So all in all, not bad. I didn't take it because we didn't have the 2 days down. We have a little bit of a MACD bullish divergence, right? Here's the low. Here's the deepness here. Here's the deepness there. Definitely less deep than this. Is it less than 50%? I guess it's about right there. It's about right there. So, all in all, not too bad, but I decided not to take it because it only had 1 down day. On the weekly, well, look, I mean, we're above the 1 ATR channel. We came back into the value zone. We're definitely moving sideways for sure. Could I take this V1 on the weekly? I certainly could, right? Above the value, in the value zone, sideways movement. But if you're taking this on a weekly, you would have to wait for Friday to see if this can confirmed. Right now, it has triggered a V1, but it has not confirmed the V1 based upon the end of the week. Does that make sense, Kamal? And in our next lesson, in addition to phasing out, we're going to talk about looking at things in multiple time frames. Bing He says, Greg, Win has not cleared the gap after 3 days. Is this bearish? Let's see the high, 127.11, high 126.81. I would have rather that it would have Bing He. That would have been better, but I really can't pass this up, right? With the sideways movement, the under the 30, the over the 30, the under the 200, the over the 200, the nice V1, and the sideways movement is what I like. And we washed out the previous low here. So in a perfect world, that would be better. I guess we're going to find out. But good question, Bing He. Really good question. If there was nothing else going on, then that would concern me. But there are definitely some things going on. And then again, if you look at the weekly, look, I mean, we were above the 1 ATR channel on the weekly, way above the third, and came all the way back down into the value zone, which I like anyway, regardless of what time frame you're using. And it bounced right off the 200-week moving average. So on 2 time frames, we're both looking pretty good. So that being said, doesn't mean it's going to go up, but it does look good. And you're going to increase your chances of having a profitable trade if you have good setups on multiple time frames. Just like I like to see a combination or a confluence of indicators on the daily chart, I also like to see a combination of confluence both on the daily and then some supporting on the weekly like this is. So we shall see. I've been doing this for so long, I never really get my hopes up. I just have to, I pulled the handle on this on the slot machine today. We'll see what happens tomorrow. All right, everybody, I am going to get out of here. Thank you so much for coming today, and congratulations to those that had Apple and had Amazon. Very, very happy for you. Very happy for anybody that has a positive, profitable trade. So again, thanks for coming. I hope to see you tomorrow. It's been kind of a crazy week, and we shall see what happens tomorrow. So have a good rest of your day, and be safe. Go out and do something nice for somebody today. And hopefully I will talk to you tomorrow. Take care now. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind.
Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.